So Super Microcomputer had a very tumultuous 24 months. I mean, just look at this spike from June of 2023. It spiked nearly 400%. And nearly came round trip, or did come round trip, crashing all the way down 86%. However, that monthly buyers weren't having it. They were going to protect this level at all costs. And so we have price spiking higher. Now stay tuned, because I'm going to tell you why this level is in jeopardy. Let's get into the actual news, because they did get some good news. They got an upgrade by Loop Capital, and they justify it in this article. So Loop Capital Market raised its price target on Super Micro to $40 from $35, reiterating its buy rating on the stock. The firm cited several factors supporting this bullish outlook, including the ramp up of the GB200 and GB300 server platforms heading into the summer and the strong growth plans for its key customers. While acknowledging potential near-term headwinds, Loop Capital believes Supermicro is well positioned for the long-term success. They go on to say that while they have convictions in their $40 price target, there's some possibility, given Blackwell ramp and tier 2 purchasing patterns, that's getting there isn't going to be in a straight line. The firm also highlighted the increase in demand for liquid cooling solutions, a key area of strength for Supermicro as a significant growth driver. Additionally, Loop Capital emphasizes the potential of increased revenue and profitability from more customizable GB300 platforms. Now, part of this move lower was on allegations that the owner of the company was selling product to a relative. You had their auditor no longer want to do business with them. It was a mess. Now I'm going to tell you why this level is in jeopardy. If we scroll down to the weekly chart, in past videos, I mentioned that if this move higher was going to have legs, it needed to take out $50. Not only is $50 a round psychological number, but that was where we last had support. And support flips when prices breach and close below and becomes resistance. In addition, the momentum, the trend is still to the downside. And the fact that you did get a candle close below this level. So in theory, this level is no longer null and void. However, we're going to keep it on the charts. Now, if price breaches again, you have this little bitty level of interest in the form of weekly buyers. I'm going to show you how that level was formed. Got a rallying price, basing candle, and then a rally out. And this wick over wick potentially is another level, but on this smaller time frame. And look what happened with price. Comes down, dips its toes in the upper portion of the zone before moving higher. Let's confirm that level. The fact that price only dipped its toes, this level is still valid. Look at that. A rally, basing candles, gap higher in the form of another rally. This level is still valid. So potentially, if Supermicro dips below $20, $18. I would anticipate the buyers coming out with all ammo. Thanks for watching. Subscribe. Please like the video.